Good morning and welcome to another edition of Bourdier's Monday Report. Last week, on the economic front, we had the publication of Purchasing Managers' Confidence figures for the United States, the Eurozone and China. In both the manufacturing and services sectors, the statistics were all close to expectations and point to a stabilization of activity at current levels. In the United States, the focus was on PCE inflation, the Fed's preferred measure of price growth. General inflation is in line with expectations, rising by 2.3% year-on-year. On the other hand, underlying inflation, excluding volatile elements, rose slightly more than expected to 2.7% year-on-year. As we can see, this is above the target set by the Fed, which is preventing it from cutting its key rates for the time being. On financial markets, the end of the conflict between Iran, the United States and Israel rekindled investors' appetite for risk, helped by a 12% fall in oil prices. Consequently, equities rose sharply by more than 3% in the US and emerging markets and by over 1% in Europe. Sovereign 10-year yields fell by 10 basis points in US dollar terms, pushing up bond prices by 0.8%. The opposite trend was observed in the Eurozone, which partly explains the 1.3% depreciation of the US dollar. Against this backdrop, it is not surprising to see gold fall by almost 3%. Also shortened by the US bank holidays, it will be a busy week for economic releases. In particular, we will have the publication of the ISM manufacturing and services indices and, above all, the US employment report for June. The budget bill, the one big beautiful bill, could also be ratified by Congress by Friday. In the Eurozone, inflation and retail sales figures will be published. The payment sector is undergoing a great deal of change, not least as a result of technological innovation. That said, the barriers to entry are high, and recent history shows that the premium for existing leaders is justified. This is why we are and remain invested in Visa. That's all for today. Thank you for your attention and see you next week.